Bitcoin could reach in the next 5 to 10 years levels of $1 to $3 million a Bitcoin. The monetary inflation is unstoppable. It is inevitable. It is nothing new. There was gold-backed credit. Now there is Bitcoin-backed credit. Digital credit is Bitcoin-backed credit. Credit is a 3x larger business in terms of size than Bitcoin-backed equity business. The largest institutions in the world, the largest corporations in the world of Bitcoin are accelerating their accumulation at unprecedented levels, going from 100K Bitcoin on their balance sheets to 1 million plus Bitcoin on their balance sheets. This is because of the traditional financial infrastructure. Bitcoin today represents 0.1% of all assets in the world. And Bitcoin is going to... Hello everybody, how are you today? All good? Well, first of all, I would like to thank very much the organizers, Matthias, Martin, for putting up such a great event every year. Europe's best Bitcoin event all the time. And thank you all for being here today. It is a great honor for me to be here with you today and to share our journey as Europe's first and largest Bitcoin treasury company. We work for Bitcoin. We work for the adoption of Bitcoin in Europe. Europe needs Bitcoin, and Capital B is focused on bringing that future adoption for Bitcoin along with our shareholders. First of all, a few elements that I would like to highlight. This is a publicly traded company. There are risks, and we invite you to consult all of those elements on our website. But first of all, a few words of introductions, and then I would like to spend most of the time on what we see in the Bitcoin markets today. What is the type of questions that we get from our investors? We speak every day with banks, with the largest financial institutions in the continent, and I would like to share those elements with you. We've been the first and largest Bitcoin treasury company in terms of holdings, in terms of volumes in the market, focused on increasing Bitcoin per fully diluted share over time. We've raised 300 million euros over 1 year and a half, which is not very common in Europe for early-stage companies. We hold today 119 BTC, and our objective is to grow, of course, that base of Bitcoin over time. And we have a team of capital markets experts and Bitcoin pioneers. Adam Back, legend investor in the company. Yves Choueifaty, president at Tobam, the first fund to adopt Bitcoin over in Europe. And of course, Blockstream Capital Partners, the largest Bitcoin investment group in the world at the frontier of Bitcoin and traditional finance. UTXO Management, the investment branch of Nakamoto, and a team that assembles 70 years accumulated in the banking, capital markets, technology, and corporate finance industry. We have 1 to 3 million euros of volumes every day, 3 to 5 million on a one-year basis, and we have a very strong shareholder community of 30,000 individuals, more than 50 financial institutions in the world and across the world. We are a global company. We've been the third Bitcoin treasury company in the world after Strategy in the US and Metaplanet in Japan. But first of all, we chose Bitcoin. Bitcoin is the best store of value in the world. If you take over 10 years and you zoom out, you will see that you have the S&P 500 that's doing the same performance over 10 years than gold and silver, and that's basically 10 to 15% annualized. And when you see what Bitcoin does, Bitcoin is doing 2 to 3x that performance per year on an annualized basis. And this compounds and compounds. And when that compounds, well, you have Bitcoin doing 15,000% performance. That is the trend that we are in. And in fact, we had forgotten to include the Eurostoxx 50, just to compare. And when you look at the performance, it's actually only 100% over 10 years, which is lower than everything else. So Europe does need Bitcoin, and when a European company adopts Bitcoin, it can experience extreme growth. Last year, we did plus 4,000%. Then it got, of course, lower with the Bitcoin price and the premium compression. But Bitcoin, since we adopted it, is down like 20, 30%. We are up 200 to 300%. And that is due to our activity in the capital markets. That is due as well to the strength of the Bitcoin network. The Bitcoin network is pushing adoption more and more every day, and that creates higher and higher bottoms over time. $200, $3,000, $15,000, $60,000. Bitcoin is growing by a factor of 20x when you spend 8 years in the network, and collaborating, associating yourself, your company, your institution to Bitcoin is a superpower. And that superpower is the power of the digitalization of capital, with Bitcoin quietly but surely replacing gold in the digital era as the unquestionable asset, as our investor Yves Choueifaty at Tobam would say. If you had seen a $100K investment in gold in June 2020, compared with a $100K investment in Bitcoin in June 2020, today the performance of Bitcoin is 2 to 3x higher than the performance of gold. And that is due to the higher growth rate of the Bitcoin network. And if it continues at such a pace, Bitcoin could reach in the next 5 to 10 years levels of $1 to $3 million a Bitcoin. And that is the substantial growth that you can attach yourself to if you adopt Bitcoin on your balance sheet. Bitcoin is extremely volatile. It is 60 to 80% volatility over time, but I think it's helpful to take a step back and see in which phase of the market we are right now. The phase of the market that we are in right now is called a bear market. It's called even a consolidation market now. It's a bottoming phase that is starting, and you should always be prepared for 50% volatility either way in Bitcoin. But what we know is that in the past cycles, every time that Bitcoin has gone through those levels, Bitcoin has grown by 8, 9 to 121x from the levels that we are in those types of phases. And one would think that the situation that we are in today is new, that there would be macroeconomic uncertainty, that there would be new technology waves, that there would be wars, that there would be geopolitical conflicts. But we keep just forgetting that these things keep happening and keep happening again and again and again. There was the Cold War. There was the end of the gold standard. There was oil shocks. There was the closing of the Suez Canal. There was an Iran revolution. There was an internet bubble. There was a global financial crisis. And what happened after each and every single event? The monetary inflation is unstoppable. It is inevitable. It is the reality of the world when you see across history the inflation, the imbalance between the government debt and the government resources is so high, is so important, so significant, that if you take a period of 100 years, if you take a period of 60 years, of 20 years, the annualized inflation rate is 7% per year. And when you would look at that chart, you would think, but it seems like it's accelerating. It seems like it's a new phenomenon. But when you split that chart into 21-year periods, you realize it's the exact same situation all the time. And the situation that we are in today, with geopolitical conflict, with uncertainty on the interest rates at the Fed level, with war, with potential technology bubbles, and so on, is just a repetition of what we would have seen in the past. In fact, the last 21-year period that we had where there was oil shocks, Iran conflict, and major geopolitical movements, the inflation over the 21-year period was 493%. And here I'm just talking about the M2. We are not talking about the M4, including all of the government debt. It would be even higher. And so this is the big opportunity because, of course, there are only 21 million Bitcoins. And on the other side, there is an unlimited fiat supply. But that opportunity comes with breathing, comes with waves of adoption that then create movements that not all investors are ready to take in. There are movements of minus 50%, minus 70%. But this chart is a piece of art when you look at it, because every time in the history of Bitcoin where we've been at 50% of the supply in loss and 50% of the supply in profit, this has marked the most significant generational bottoming phases in Bitcoin. And in the past, there was not all of the information that we have today. So no one has a crystal ball, but the largest institutions in the world, the largest corporations in the world of Bitcoin are accelerating their accumulation at unprecedented levels, going from 100K Bitcoin on their balance sheets to 1 million plus Bitcoin on their balance sheets. And there is, of course, a debate online on whether this is good or bad for Bitcoin. In technologies, you never discuss if technology is good or bad. If it works, it's adopted. Bitcoin works, it's adopted. Internet works, it's adopted by governments, by institutions, by corporations. Bitcoin works, it's adopted by the same type of players. And Bitcoin treasury companies are the segment that is growing the fastest, the Bitcoin accumulation in the world. In fact, when you measure their performance against Bitcoin since the launch of their respective strategies, they are the most performing companies in the Bitcoin world. And in fact, they outperform all other asset classes, even within the AI wave that we are seeing right now. And it's quite telling to see that across many different time horizons, you could take strategy in 2020, Metaplanet early 24, Capital B late 24, Strive late 25. Everybody is outperforming Bitcoin. And Bitcoin is down, and those companies are up. Why? Because they increase Bitcoin per share. How they increase Bitcoin per share? With digital credit. Digital credit is Bitcoin-backed credit. It is nothing new. There was gold-backed credit. Now there is Bitcoin-backed credit. Even companies in the space, out of the Bitcoin treasury companies that sometimes are skeptical of Bitcoin treasury companies, many times are involved in Bitcoin credit businesses. Because Bitcoin credit is a 3x larger business in terms of size than the equity, Bitcoin-backed equity business. This is because of the traditional financial infrastructure. Bitcoin today represents 0.1% of all assets in the world, and Bitcoin is going to 1% to 10% But as we go there, this is because we are integrating Bitcoin into traditional finance, and traditional finance is integrating Bitcoin. And the adoption of Bitcoin comes through products such as STRC, such as SATA from Strategy and Strive. And that is a big example for capital B towards the future. That segment of digital credit that provides double-digit performance with lower than double-digit volatility, which is in fact in and of itself already better than the S&P 500, and which is better in terms of return than all other asset classes for Bitcoiners and people that think that Bitcoin is here to stay. This asset class has grown by 23x over a period of 16 months. It is the fastest growing credit market growth in history. And how does it work? Well, Strategy has the money on the balance sheet. The orange dots that you see are the Bitcoin or Strategy's balance sheet. The gray dots that you see or that are almost not seeable, they are so small, these are the annual dividend of Strategy, but they are importantly in fiat. And as you know, fiat is getting devaluated at 7% annualized per year. So if you have on your balance sheet a stockpile of Bitcoin that is 3 to 5x larger than your notional value of Bitcoin-backed credit, you can grow Bitcoin per share at a rate that is quite unprecedented. And Strive, the success of Strive and the speed of adoption of Strive and SATA, with about 2% the size of the balance sheet compared with Strategy, but 14% of the volumes compared with STRC, shows that a smaller company, in terms of Bitcoin on the balance sheet, in fact 40x smaller than Strategy, can in fact have just a difference of 7x compared with the volumes of the digital credit product. That is because there is a very large demand for digital credit. And when you look at the effects of a digital credit instrument on a corporate balance sheet in publicly listed markets, you can see that this has allowed Strategy to go from 600,000 Bitcoin approximately to 840,000+ Bitcoin. So that should at least raise some curiosity or some interest for the traditional world. And when you see that Strive has gone as well from 7,000 to 19,000, you see that there is a massive growth opportunity. Now, where does Capital B stand? Well, Capital B has been the first and largest Bitcoin treasury company in Europe, has the strongest balance sheet, no fiat credit leverage to date, and has been the largest Bitcoin-backed Bitcoin credit issuer on a non-listed format. And our objective is to go to the potential, the opportunity of the digital credit market with perpetual type in the capital markets to maximize the number of Bitcoin per share. Our focus is to maximize BTC yield, the increase of Bitcoin per share, and we see perpetual digital credit as a massive opportunity for Capital B to grow over time together with its shareholders. Thank you so much all.